welcome to Thursday's free daily pre-market report. Starting off here, taking a look at gold. The reason being, this is just from an educational viewpoint, brilliant. I had discussed yesterday in the members area buying gold, and both the ways we suggested have panned out. Now this isn't great if you're if you're long, obviously, but just educational viewpoint, brilliant. We looked at this candle here and we said, you know, move halfway back down it, which took us to about 1105, 1106, where the 50-day EMA come in, and we got that move right down there. Had a low on this candle here of 1105 and a half. And you know, I had a lot of emails, people saying, but if it moves down to there, we get a bearish engulfing. But then, you know, I was sort of saying, well, no, because what we can get is the bounce off that level once it comes, as we did, and form this sort of gravestone doji. So you know, you haven't got to be so concerned about single candles. It's price action we're looking at. A lot of people wanted to buy up here, but we're saying, no, wait for the pullback, just be patient. If you miss it, it's fine. So okay, gold's down heavily here, and people are saying, oh no, the trade isn't going to work. But you know, the US dollar, remember, was very strong yesterday, and sort of gold's been following around risk aversion. So you know, there's a lot of things going on at the moment in the markets. Obviously, they're sort of settling down again. S&Ps are moving higher. So the sort of first trade there on this candle, you came down to 1105 and a half. You get off the 50, you get filled, you get long, makes a move high, and you think all is great and brilliant in the world. Then we also suggested for traders who are more conservative, wait for the actual pullback to just above the trend line, and you get that as well. So that's just for me. I mean, okay, I'm long, so. Maybe not so great, because I would have liked it, you know, as we got triggered down here and it moved right back up again to the highs. It would have been pretty nice to, just keep the profit. But as we are, let's put a 60-minute chart on, as we are an educational service, although some of you may gasp at that, you know, it would have been nice if we had sort of made the move back down and then closed up, you know, at the highs up here, but we haven't. And we've made the move back down to the trend line, downward trend line. So great way. There are two ways of buying when you see that setup. You broke the stockers, which is gold futures, broke the descending triangle, the trend line here of the descending triangle. You get a nice bullish close above, and then you're looking, thinking, okay, I'm going to be a little bit more aggressive with this. This is a strong bullish candle. I'm going to buy a pullback halfway down this candle. So it just simply took the highs and the lows. You know, the lows was 1192 and a half, the highs were 1121, the midpoint there is going to be about 1105-ish, and then 1105 and a half was the lows. It lined up with a 50-day EMA on this candle. So you're buying a sort of, even though it doesn't look like it's halfway down, it looks like a bit more, because we've got this long wick here. But when you look at it there, sort of bracket it, then you can see, you know, there is pretty much the midpoint for that candle. So halfway back to it, lined up with a moving average, which is nice. Buy it, and then the other way we suggested was the pullback to the downward trend line of the descending triangle, and that gave you a chance to get filled as well. Now this may completely roll over, and you know, the trade might not work out, but it's just nice to get within 2 days both sort of techniques being filled. So if you're a bit more aggressive or a bit more conservative, things are okay. Now stop wise, you want it really below the lows here. And you know, you've got all these moving averages, the downward trend line, and this is about, I think it's about 1092 and a half. The lowest 1092, so about 1091, 1090. Just below that sort of, you know, that action there is a pretty. So just readjusting myself on my sort of old desk, old office chair, which I must get. Everyone keeps saying, "What is that squeaking, bloody squeaking noise in the background?" I'm saying, sorry, that's my meant to be very expensive office chair, which was, you know, I was sold by Salesman of the Year. I just knew he was too cheesy. I knew the moment he said, "Wow, that's a really nice scarf, sir. Where'd you get it?" I thought, oh, how have I walked into this one? How do I still fall for this crap at 42? Yeah, where'd you get it? Is it cashmere? Oh, that's nice. Oh, great. Please like me. Please like me. I'll buy your product. Let's take a look at the S&P. So, you know, no big surprise at the moment. The high here from a couple of weeks ago is at 1103 and a half. So 11.0 sort of 3.5. No surprise we're sort of getting a bit of overhead resistance at those levels. So as I say, I'm not playing it in between the levels, in between down here the trend line and up here at 11.03. Just not interested at the moment. Even though it's had a nice move, it's sort of a bit in no man's land. But what you can do at this point and say, well, hang on a minute, look, you know, is this going to go higher? You can take a look at let's take a look at the Dow Mini, and you can see the Dow Mini has already sort of just edged up. That was the candle, wasn't it? We looked at the Dow Mini's already edged above it. Okay, so you can say we got more overhead resistance at 1037.5, but Dow is sort of nudging slightly a bit higher. Let's look at the Nasdaq. It doesn't look a great deal on that chart, but it could be just a little heads up. It does look very similar. Nasdaq, no. So maybe the Dow, you could, it's not significant, but it's just a little sort of, maybe a little bit of a heads up here. That was the candle we looked at on the S&Ps. That hasn't been taken out on the S&Ps, but on the Nasdaq, it's sort of on the brink. On the Dow Mini, the YM, it's on the brink. Go back to the S&Ps. You can see it's you know, it's a bit of a way above there. So YM, Dow Mini could be a leading indicator for that. But as I say, I'm not playing it in that range. And we had obviously, you know, had a strong US dollar yesterday, but not, you know, a little bit, still moved above the 50 without much trouble. And at the moment, just sitting smack on the 50-day EMA. 8 and 21 EMA is trying to cross. I think we get above this 1104 level, which is, that's a bit more above it, but really I'm looking at this level here, and we can hold that for, you know, get a couple of candles on there for a couple of days, just find a bit of support there, then we'll see if we can get long and move higher. But at the moment, pretty neutral there personally. Okay, everyone, that wraps up excuse me, this free newsletter. As usual, just if you would like a 1 month membership, complimentary membership to the Genius Trader members area, where you can watch the in-depth members report, which I'm going to go and record now. Just go to the home page, down the right hand side, you just hit the link, put your username, password, and we don't say any credit card details, and you get the 1 month complimentary membership, and you get membership to the live trading room as well, where Jerry Slager's trading DAX and Euro stock, and Jerry's principal trader at Swiss Direct, former floor trader, very experienced guy. One other thing, we have a public webinar tonight at 9 PM London time, 4 PM Eastern. All you need to do again is go to the home page, scroll along the right hand side at the bottom of our home page, and you'll see public webinar, and you can just join it from there. I'm just going to discuss today more like, you know, how some traders can take what they want from the markets, why other traders struggle, and it's more talking about the ego and transcending our biases and distorted beliefs. Okay, everyone, that wraps up today's newsletter. Look forward to speaking with you again tomorrow. Till then, happy trading.